high-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading workshop webinar here. Just a quick intro on our format for the live trading workshop webinar. We've got a lot to cover today. We've got some live trading potential trades that we'll be looking at right in the markets so that it's all real in real time. And then that's the best way that you learn. Second is that we've got a topic for you as well. We'll go through the topic for today, which is why market structure is important, so critically important for swing trading. Okay, so that would be the topic, and in that topic what we're going to be covering is we've prepared this slides for you guys as well. It's going to be very, very pivotal and critical, which is we're going to be talking about the three building blocks. A lot of people don't even have any clue about this, right? They don't even have the three building blocks for market structure, and because of that, the most important thing, they're not able to go on with the first step. Okay, the first step being the quantifying the TNBs, which I'll go through as well. Now, without this is the critical thing about swing trading, right? You won't know the beginning and the end of a swing. This is where everybody gets it wrong. So we'll go through that as well. And then the three stats that you can pull out from the market structure, which a lot of people do not have as well. And then the bonus thing is then we will talk about which is the best market structure, because they don't have all of these things, traders. Most traders do not have this. That's what really results in your inconsistent performance. And we're going to break that and we're going to move you towards consistent performance. Okay. And then finally, what is the last thing that we actually cover in this live trading workshops is the third thing. We look at Q&A and some upcoming events that are coming up as well. So this and more in this live trading workshop. Hi traders, those of you joining us new for the first time today, this is Thierry Nalpon here, founder of Master the Markets, Elite Traders Conference, and the Traders Open Day. Okay, so without further ado, let's go live straight into the markets and let's take a look at what we have for today in the market. So we got the gold over here. I'm looking at, let me just quickly just adjust this. So we got the gold, let me see, on the daily time frame here. So on the daily time frame, we still got an uptrend phase one. So let me just update my other spreadsheet over here. I'll show you that in a minute. Some of you who've been coming regularly, you would have seen that. On the 1 hour, it's showing on a down. On the 4 hour, this is why market structure is so important, right? And that's why we keep telling you guys about it. This is one of the things that it will give you in a systematic manner as well. The trends and the phases, okay? So let me go through this. So downtrend, so interesting. So across all the different lower time frames, it's all in a downtrend phase one. Okay. So even on the 1 hour, on the 15-minute and the 4 hour, okay. So the only one that it is showing in an uptrend at the moment until maybe today, then maybe it might change on that one as well. So let me just move this to 1 hour. And okay, there we go, right? So we got that. In terms of the 1 hour stretch, yes, it's gone to the lowest one. Let me got that. Range lines wise, let's drink some water. So here we got range lines wise, we got the lower range as well. Bro to ST ratio. So let's take a look at that. The Bro to ST ratio, yes, is towards the downside. So it's very straight, clear bias to the downside here. And it's also taken out the previous daily low. When I did the futures workshop, I was going through this much more in detail. Entry bias is towards the short, because this one is very, very clear, isn't it? Let me just do that. Let me just show you all this table in a minute. I know some of our clients are following all of these strategies. They're really doing very well on their different accounts, because in intraday you've got to be consistent, and I think that's the thing that we struggle with is time, but we got other traders, our clients, who are doing it. So here's on the table. If you see, we've done previous videos on this as well, and you can take a look at that. In fact, we'll be rearranging the YouTube channel so you can all find this all easily. I'll show you some reference links as well. That actually just reminds me, in terms of the reference links, those of you who don't understand the terminologies or anything, right, which I'm talking about over here, I think the first thing, we've done something new, I'll talk about this later, is the masterclass webinar over here. Okay, you can click here, you can register, you can choose your date and time over here after you fill in all your details as well. So this will be really good because it's compressed 55 minutes, and it shows you everything. Like, you can get to know about us and all the terminologies. It will take you through a very systematic manner. So highly recommend this. I'll talk about this later, but I just thought I will just mention that those of you who want to register that for that as we go through the um, the analysis. There's 3 days to choose from. That's what we released for now, so you can take a look from there. Right, so let me go back into here. You'll see a link pop up as well on the YouTube chat, so you'll see that. Good. Now, so I've got the bias over here, right? So that's towards the short side, okay, on the gold. But just because of this, we can't just jump in. We got to put some timing in as well, okay? So we'll analyze that in a minute. I just want to quickly take a look at Brent and oil. It's been a big thing, isn't it, over all the news. I mean, those of you who've been following all of this will be making really some good amounts of returns on this, because crude is just going one way, right? It's just going towards the upside because of the Straits of Hormuz in Iran being blocked, isn't it? That's what's really causing this surge. I know, in fact, they released it to other countries, but then not the US. But still, there's still a lot of tension between this. So the oil guys are really very happy now. Those who are drilling it, makes a lot of big profit margin for them now. So all this across, I mean, I don't even need to take a look. It's all uptrend. I just want to see the quick thing just in terms of phase. Nope, I saw that just now. It's all towards the upside, guys. I mean, it's been on the upside for a very long time. These are all very good opportunities here. Those of you who have been waking up quite early and you've been observing all of this, you see, this is the good area to actually look at when it's going on a downside, right here. But then you know that the overall trend is on the upside, so you look for certain change in market behavior. Okay, that's what we look at. So let me put all this for now where we are at the market. Uptrend phase one is just all clear, up as well, latest up range, upside. This one also, I think, towards the upside as well. In fact, it's an outsider bar. If you take a look, right, this one here today. And yes, it's definitely done his 180R. Let me just do that. Has it done his 180R? 103 is what it's got. Yeah. So it's no. Yes, sorry. And yes, and 180R. So it's done his range as well. And it's towards the long side. Okay, no problem. So we got that one as well here. So I just need a bit of timing again, because I need a bit of retracement here rather than just chasing the market to go on the upside. So the last one I've got is the Nasdaq. So let's see. Nasdaq is looking good on the futures over here. Let me just see on here. I'll just switch this on. I think, yes, this one is a downtrend phase one on the ES mini. And then we got the 4 hour, I believe, let me see, on this one is, it hasn't taken out this high, has it? Let me just check that quickly. 25217. Yeah, 210. So that's still in a compression. Okay, so it's a SMC up at the moment. Okay, there's no trend yet. This will become more clear when I go through the topic in terms of how important market structure is for swing trading. And I'll show you some examples as well in real time now. After I looked at all of this, 1 hour time frame. This is a 1 hour. 1 hour is uptrend phase 2. And then the 15-minute is downtrend phase 2. Okay. Right. Okay, good. So we got downtrend phase 2. And then finally, just bear with me. I will definitely explain all of this in a minute. Average stretch. We got that as well. This was all done by our clients, by the way. I mean, everything that you're seeing over here, they saw the material just like you guys who come on a YouTube live stream or through our emails, get inspired, and then they say, you know what, we want to code everything for you. We've got a nice programmer community, all by our clients. It's really great to see that. Everything you're seeing in the trend box here, all this data, which I'll go through in a minute. Right, so here, I'm seeing a good volume spike here, elephant in the room. Here I got a downtrend phase 2. It's just looking to lift over here. And I will, if there is a chance, we will look to take it. This is a 15-minute. I did take a live trade on the futures workshop as well, but we did with the US company. Let me see here. And then 1 hour is uptrend phase 2. I think I've got all the information now. So you can put it together. It's not as straightforward, of course, as the other commodities. But you see, on the 1 hour stretch, let me see, it's both, isn't it? Yeah, it's both, but it's just taken out the lower side first. Okay, latest, both, but latest is this one. Latest is lower range as well, is that right? Yeah, 12 o'clock. Range line, correct. So it's also taken that to the downside. Bro to ST, no, that's nothing there. It's equal at the moment. Okay. Yeah, I can't do anything. Previous daily high and low. Let me see. Aha, it's taken out to the upside, is it? Okay. But you can still make its range. So you know what? We will keep it to the upside here. Sorry. Upside. Upside here. Let me show you this in a minute. Here is daily high. And what are we concluding here? So let me show you this. So this is what we do. So whenever we look to enter into a trade, it's always two factors. Okay, I mentioned this before. One is a direction bias. Second is just because the direction bias is a short or a long, right? We just don't jump into that, all right? Just like the Brent or the gold. The second thing we then look at, traders, is timing. Okay, when do we get in? Okay, that's when we need the price action to guide us. So in terms of this, the first thing is the direction bias. I can see, yes, it's not a straight cut, is it? It's a downtrend here. Up 1 hour, it's uptrend phase 2. This is a downtrend phase 2. Yeah, it's all over the place. So really, to be honest, I mean, I'm getting two to the downside, even though direction is still fully not there. And then, yeah, if this one does come down, then I'll get 1, 2, 3, and 4. And I'll get a 5. Not sorry, only 4. That's all I'm getting. Yeah, I'll only get 4. So it's not really 4.5. I mean, this is all we can do. Not a very strong trade. So if I were to come into this, see where the volume is coming. It's over here. That's a bit of a concern. the volume here. But you know what? I'm just going to mark out both these levels, all right? So I'm just going to do this. I'm not going to jump into this trade. We're going to see how it's going to behave. So I'm going to price trap this with both these levels and see how it behaves. My concern is this volume here, right? It cannot be to the ups, cannot be to the downside. This one, strength on weakness, isn't it? Yeah, and I don't want just because of the opening bell just to suck us in and then come back. So wait, so the other thing is, let's see the ATR number. It's about 475, right? It's what it's saying. Yep. So let me just see this very quickly. So 475 at the moment, what is it doing? 332. So let me just quickly work it out here. Is it done its range? 475, 380. So 380, no, it's not done it yet. So from high, 25210. Okay. Let me do minus 380. 25210 minus 380. That would be 24830. Main thing I want to take a look. Yes, it's well above that. That's fine. 24830. Okay. So that's my first point here. 24830. Okay. Right. So it would just be here. Interesting, isn't it? It might do its range. You know what? Yeah. Let me see this. 58. I think we might do a trade call on this. 58. Gotta give it a bit more room. Yeah. Let me just give this trade call for now. And SMP, right? E-mini futures short. Don't have that much time on this one. So entry is 24863. 863.75. So I've given the entry. Those of you who want to track that quickly, I think it's doing that. And our target is going to be for 24830. Okay. Might just do it. I think just I've got the target here written out as well for you guys. And then our stop loss will be, this should be a very quick trade. Let me see. Right, my order's gone through. That's good. We're very nearby that level. In fact, I'm going for the high because 24,925. But in fact, I don't even need to put the stop loss. It's gone through it. If you did put it, so that's good, traders. So those of you who caught that, that would be great. 24,925.75. Okay. If you did put a stop loss. Right, so if I were to tidy that up, just for your reference, you can then learn through it as well later on. If we've got our range, that's good. I'll give you some reference videos as well. I know a lot of you are asking for that. That's the usual questions we get. Where do I learn more about this? That's why we need more traders, really. I mean, you need to have interest, you know. All of these things takes commitment and consistency. It just doesn't come in a second. So yeah, I just tidied that up. So for those of you guys want to reference that, then you can take a look, okay? So 24863 is where we got in. If I want to show that visually here, so 24863.75, okay, and stop was for 24,925. So we went for the 0.2 ATR. Now I'll give you another target that we can take a look. I've come out at the first one, and then those of you guys who've been following us, you will know what I'm talking about. But those of you joining in new, I will explain this in a minute. 24,830, I've got the target. And then the next thing is, right, so I've got the 380. So you see, the first thing here, right, is the 0.8 ATR target. Okay, 0.8 ATR target. Now, yeah, when this closes, we will see it happen. So 24,830. So I'll do I'll just write a text over here so that you guys understand it. Those of you been following us for quite some time, you'll understand this. It's a really good, strong strategy based on strong principles. It's popularized by Toby Crable, actually, big hedge fund billionaire trader. I talked about this in detail in the last futures workshop. So if you see, we actually caught part of a swing. When I explain the market structure, you will start to see that as well, on why is that so important, actually. And that's part of the reason why when I caught this trade as well, because it really matched up. If you see, the bottom got confirmed here. It was a mixed signal with a volume, wasn't it? But then after that, then you can see that that took out this low. You see now, our thing has picked it up, right? That's a top confirmation. Okay, that's the bar that confirms the top. Okay, right. So that's part one of the 6 trend variations we got. So, and that's why we took that. This will make more sense once I explain the topic, the market structure. That's why the market structure is so important, traders. Okay, it will make more sense. So just bear me a little bit. I'll go through a topic for today. I know those of you guys really want to hear that. Now, so 0.8 ATR is that one there. And then if I want to do a second target, we'll see how it goes. Momentum is quite good. I did 0.8, didn't I? This one is 485. So if I were to do that, 25,210 minus the 485. Okay, let me just do 485. Or we can do 486. Just 24,724. 24,724. That's when it would do is 1 ATR. Okay. Right, something around here. All right. That would be a 0.8 because the 0.8475, wasn't it? This one was 47. It's 485, was it? Okay. Maybe I did punch that wrongly. 485. Let me get that. So 485. Let me get that wrong correctly. 485. Right, need to see it on the. It's 485. So let me do that one more time. 485. 388 would be the one. So high, just bear me on that. High 25,210. Okay. Those of you who understand this, that's good. In a minute, I'll give you all the reference links. 318, 388. Those of you who've done it, I think you're punching in the numbers to me. That's great. Let me put it here visually, then everything will make sense, I promise you guys. Once I go through the details, 24,822. Right, we'll keep this one. 24,822. Right. Those of you still took that, I mean, you still would have hit the target once you calculated it correctly. Just now, let me see, 485. What did I actually do? 380, is that 25,210? 485. 0.8. Let me just take a look at that. So 475. Yes, it's 485, 388. 388, yeah, 24822, wasn't it? I mean, it was not that far off. I mean, it was just 8 points away. But if I hit it anyway, as you can see, that low of this bar over here, 24811, right? Right. Now, if you want to do one ATR, which is 485 points, so what I'm looking to do, so let me explain, right? What is all this ATR thing what I'm talking about is we are looking to capture the range of the bar. We've got our first target. You see the ATR average range of all these bars, right? Which you can read over here, okay, on the right hand side, 485, isn't it? So I'm expecting that to do, because we've done some research on this, our clients got indicators on this as well, they programmed it. And I did show in the futures workshop, which I did 2 weeks ago. What I'm looking at is to capture this bar today that's forming on the E-mini futures to fulfill that range, basically. So that's the thing what I am really looking at, okay, traders. 485 or 80%. So the 80% target is done. And then now I'm looking for the 1 ATR, which is 25210, right? Minus the 485, right? Which is what I said. 486 you can do as well. So 24724. So when it does 24724, which is around here, then it will form its 1 ATR. But the problem with that is, if it does do that, then it will be an outsider bar today. It will take out the low as well. And that, traders, it's a low probability of that happening. And this is how traders get caught out because they don't understand all of these things, okay? But another thing what I can do, which I'll explain to you in the 3 stats, I'll talk about later on as well, but I will just put this over here, target 2. In fact, I'll give you target 3 as well. You see, all this is good for you guys to go back and look at, and really learn from it. Remember, we're not here just to give you the fish, right? We need to teach you how to fish. We are very, very pro about you becoming independent. So here, target 3, I'll keep it at 24,724. Now, the target 2, I tell you this thing, right? So we got some stats on this. I'll go through in a bit later. But we can also do the 1 ATR from this close of this bar here. Okay, so that's 77 points. So the close price, 24,821, right? So 24,821. You'll see how this all makes sense later on when I talk about market structure, very critical. So 24,821 minus your 77, isn't it? 24,744. Okay, 24,744 is what we got. So I'll do that. 24,744. Okay, so it's quite near to here. I just want to see, will it become an outsider bar if it does do that? Over here, 24,744. No, it won't. So you know what? We can see how that performs. Another good one also to look at is from the low of this bar is 24,864. This one is 77, isn't it? 24,864. So after this, let's go through things in a systematic way with the market structure. Okay, then I'll explain everything. 24,864 minus this, which is, let me see, 77, isn't it? In fact, I think I should take this 70. Let me do 70. 24,794. Okay. Yeah. 24,794. Okay, so more here than there. So you know what? I am going to leave all of that. I'm just going to label all of this now. That's your 1 ATR number for 1 ATR range. And then we can reference this as I go through the topic as well, yeah? So this will make more sense then. This is for the 1 ATR for the swing, okay? Okay, good. Right, great stuff. Okay, so we got everything labeled. We'll come to all of this. So I'll just put this on the Telegram as well. 1 ATR swing, isn't it? Okay, and then 24,744. Okay, right. Always remember that in terms of trading, always think in terms of probabilities. Okay, now the first one that I gave you, the 0.8 ATR, very high probability of it getting there. Okay, this second one, 24,794, also another high probability after it takes out this swing low. Right. After this, I'm telling you, for the 1 ATR range, because of how the price action has formed on the daily time frame, which we have studied very extensively, it will start to become a bit more lower probability. Okay, but we'll see how it goes. That's why we always say, in terms of strategy construction, right? You have to have different strategies. Okay, you cannot confuse everything all into one strategy. That's the biggest mistake that a lot of traders say as well, which I've explained on our YouTube channel. We go through this a lot in our Traders Basecamp package, okay, that you guys can inquire about as well, okay? If you want to learn how to create sustainable, scalable, reproducible strategies, all right, you can always email us at client service if you want more details on that. Right, with that said, let me quickly run through these links that I want to go through and give you all the reference links to look at as well. So the first thing is our masterclass webinar. We finally got around to it. A lot of you have been asking because you said that, with the other video series and all that, there's quite a few videos in there. Can you just compress it? I like something more live, that I can listen to and also understand about you guys as a company, all your clients' journeys and success and all that. That's why we created the masterclass webinar. So it's all here, really high quality knowledge over here. So that's what we have done, traders. Okay, it'll be good to get some feedback as well once you all have watched it. So what you all do is after you go through it, once you just to understand what the webinar is all about. The title is how intermediate traders can avoid getting stopped out, right? 98% of the time. In fact, it's in alignment with our topic for today, with market structure, right? So how do you find that? How do you trade with conviction? So that's what we are going to be teaching you in the masterclass webinar. And it's all going to be towards so that we move you from inconsistency to consistent performance. Okay, so after you click the register button here, after you fill up all your details and your phone number so that you get all the reminders, and then after that you also get live trading the updates after that as well. You can choose your dates, right? You can choose either the one coming up is next week. You can do that, or in next month, 22nd April, 20th May. Those of you impatient, you can already watch that straight away. So that was all happening on the next, we kicking it off next week, 25th of March. Okay, so that'll be good. All happening at 7 p.m. So for the US guys, this will be easier. For the UK guys, you can just look at it after work as well. You can come in and just look at it as you're having a dinner or just in your room, whatever it is, right? So we got that, okay? Everything for you. Right, the next thing is, in our YouTube channel, right? So this is important. Some of you have been asking, but I want to be there when you guys are taking these trades live. I want to catch your live streams, right? So if you want to do that, the two things you got to do, right? After you come to this link, youtube.com/master the markets, what you do is after you click the subscribe button, another small thing what you got to do is click on the down arrow here and click on the all bell icon. Okay, that's very important. So that's when you get the notifications whenever we go live. All right, now the other thing is, that's why we're going live over here on the Swing Trading Edge. The other thing also is that in reference links, you remember I talked about the stretch principle and all that? Go through these videos over here. Okay, those of you who are subscribers, paid members of ours, you get more in-depth explanation of this, but you can get an overview of what the stretch principle is. Really, really highly logical, okay? Very, very good strategy, right? That principles, I would say, not strategy, principles that you can actually apply to any strategy. That's how we teach, all right? Okay, good. So some of you, and then of course you can go through all the other live streams that we have done over here. The first row here is really good. I mean, this is really very popular. Our 2025 results that you guys can go through as well, which we also not just show 2025 results, but we also show you all the previous years as well, where some years were not that great, some years were a drawdown, all of these things, all end of day strategies over here on a 1% non-compounded risk, okay? Because most of our clients are business owners and 9 to 5 workers. But as you can see, we got a lot of intraday strategies because we are strategy developers, you see. We can construct any kind of strategy. So you can go through all of that, right, on our YouTube channel. And if you want to go through more live videos, you can go under this live section as well. So I highly recommend it. A lot of great learning material. And if you want to learn about us, you can go to the more section as well about us. Okay. After that, I know some of you have been following us for quite some time. I've got look into our resources, build some trust already, then you can, just get the indicators onto your screens, right? Get the SMIOE onto your screens, teaches you the market structure and the tree stats, right? So you can go through it, and then after that, there's a small discount you can get as well on this at the moment, so you can then take a look on your YouTube chat. You can see that also over there. We'll put it in the comments box as well. Those of you after, later on when you're looking through the live stream again, the replay, you can still have it there, okay? So good. So that's on the SMIOE over there. The other things is, so Trade Nation, right? So Trade Nation is a quick shout out I want to also mention as well. These guys are the ones who are sponsoring all our live streams as well as our annual summit, right? Our Illustrates Mastermind annual summit, which happens once a year. I know a lot of you have already got the tickets. There's still a very few places left. If you want to get in touch with us on that, you can email us, okay, at client service at masterthemarkets.net. So Trade Nation sponsors all of those events for us. And then also, their spreads are really quite fixed, especially with the Brent oil, volatility and all that. They're really, really good. And you can open up an account with them. I know some of our clients already have done that. So it's really, really good. Highly, highly recommend that. Now, with that saying, yes, one thing I do need to mention, yes, because of all the UAE situation in the whole of UAE and the Iran and the US war conflict, we actually, the event that was supposed to happen in Dubai, which I'm supposed to fly out for, has been cancelled. So I know some of you already booked the tickets, already got everything ready. So you probably have to cancel those plans. I know it's a bit of a bummer, but it is what it is. Safety first always, isn't it? Right? Good. I think with that said, let's carry on into the topic for today, right? Market structure. Why is it important for swing trading? Now, before I carry on, if there's anything, questions or whatever on everything I covered so far, do type it into the YouTube chat box. And also, one thing that you've learned so far, right, on what I've covered so far on the live trading on the S&P and all that. Yes, you hit the target. More than that, what are the learnings that you've had? Okay, I'll ask that again once I have finished the topic for today. So, all ears in. Let's go for it. So, market structure. Why is it important for swing trading? Now, these are the three things that people do not have, okay? And that's why they do not have a market structure, and that's why they get to inconsistent performance, okay? Right. Now, they either they don't know the three building blocks, right, to get the market structure, okay? And because of that, they don't know what their trend and phase is across any time frame. They just do not know. And that also leads to inconsistent performance. The first step to solve all of that is to then your TNBs, which I'll go through in a bit. And then from there, once you got the market structure, is so incredible. You can pull out tree stats that you can apply to any strategy or methodology, including volume spread analysis, right? Which a lot of our clients come from, actually, from Tom Williams and from Trade Guider. Right, so now with that said, I also cover the last part over here, right? Which is the best market structure then. Now remember that most of this material I'm covering over here, this actually had been thought of back in the 1970s. We actually understood this from my mentor, who got taught by his mentor's mentor back in the 1970s, okay? And it's quite solid material because, if you look at Linda Bradford as well, the market wizard, and a lot of high hedge fund managers, right, the institutional level, managers also talk about market structure. It's not a retail terminology. That's why most of you would have heard it. But if I say market structure is so critical for swing trading, then you all can relate to it, most retail traders, right? So you will see how that happens. So what are the first thing? Okay, so what are the three building blocks then? Right, the first thing for market structure, as most of you all know, is very simple. It's the price action. It's like if I give you the reference analogy of building a house, okay? And I'll give you the simplest way to really understand market structure. You'll see why it's simple and why all of this comes together, right? So we got a house here. To build a house, the first thing what you need is a brick, isn't it? Once you put all the bricks together, then it starts to build the foundation or the framework of the house, right? After you got the framework, then you put the plasterboards in, then you can then put the furniture, the sink, and all of that lot, right? But the first building block is the bricks. That's what price action is. Okay. After the price action, once you put the price action, stack them all up, just like in a house. Okay. The next thing then that forms is what we call the swing. When you think like that, the whole market structure can only be two types of swings, right? Either it's a bottom to top swing, right? And that's when you want to go in a line with the swing direction, bottom to top, or it's a top to bottom swing. So if I want to show you here as a practical, you see on the S&P here, right, what we had is still on the strength on the downside. So you see over here, this is quite now clear for you, isn't it? Look at that. That top is the most recent one that got confirmed, right? This one here, sorry. Right? So what type of swing is that, right? You all can type in into the chat box, yes. What type of swing is that? Is that a bottom to top or top to bottom? Yes. Some of you already got it, isn't it? Which you see, this is a top, right? That's the last one. So that will be a top to bottom move, isn't it? It's going on the downside, right? But you don't just jump into that. That's not your direction bias, okay? We're still at swings, so hang in a minute. So swings, okay? So it's really top to bottom. So the whole market can be compressed into only two types of swings when you think like this, bottom to top or top to bottom. On the S&P, it was top to bottom. Now, after that, once you put all the swings together, okay? In fact, over here, I've shown you, right? Once you put two swings together, okay, you see, because there's a bottom to top and a top to bottom swing, you get one cycle. This is what we call one cycle. Okay, very important. Yeah. Now, before I go on to the next part, in fact, let me go through the first step first, then I'll come into the last part then. Now, after you get the cycles, right? So you got the cycles. Now, once you stack up the cycles, don't know if I got it in here or not. Did I put that? No, I didn't put that over here. After you stack up the cycles, this is one cycle, isn't it? Right? If I put another cycle next to it, you see, I've got one cycle, I've got two cycles, right? Now you see, some of you will be quite quick in noticing this. Once I put two cycles next to each other, then I can then compare the tops and the bottoms of the cycles. In this case, it's a higher high, okay, and a higher low. This current low is higher than this reference low, and this current high is higher than this reference high, right? So we got higher high and a higher low, and that is your definition of an uptrend. But you see, the thing that people get confused about is that they'll just look at a swing and they'll say, you know what, yeah, that's a bottom top, that's an uptrend. Now that you understand the three building blocks of market structure, how can that be an uptrend? Only after it forms a cycle. Then you compare the highs of the cycles to each other. And then in this systematic way, then only you can say it's an uptrend, is it not? Once it fulfills the definition of higher high and higher low. Also it's not, you see. So this is the critical thing. You know, people look at price action and they just look at one bar going down and they say it's a downtrend. You know, it's really funny once you understand this. It's hilarious. This is why a lot of people stuck in inconsistent performance. They don't even understand these three parts. Now, after this, right, after you got the cycles as you would have guessed it, then you can get your trend and phases. Okay, right? Our trend you already understood. And basically phase is basically what we have named it here is the one that goes in alignment with the trend. You see this bottom to top with the uptrend is going on the upside as well. We call that phase one. And then here, this is top to bottom going against the uptrend. That's phase two. And then if the trend sustains, then after that, it just reverts back to phase one again. That's pretty much it, right? No Elliott wave, no complexity, nothing of that. Just phase one, phase two. That's it. Are you in alignment with the trend or not? But you got to get the trend first, then only you can put the phase together. You can see how now the swings and all that coming together for the phases, right? As long as that swing, you see, this is a bottom to top move, is in alignment with your uptrend, then that's a phase one. Now, the good part about this is once you understand the three building blocks, we can code it, right? And that's what you're seeing over here, okay? Across all the time frames, right? I can see it over here, you see? Downtrend phase one, uptrend phase two, you see 4 hours, no trend, this one is 15 minutes. But if you look at the goal, this is a bit more straightforward here, isn't it? Across all time frames, you see? This one is uptrend only, but over here you see, look, on the 1 hour 15 all it's downtrend. I can quickly read it because it's been programmed according to the building blocks that create a market structure. Okay, so that's what then I can fill up this table here, isn't it? I showed you this table. I can do it in a systematic way. No more guesswork, traders, right? Because you see, if I did guesswork, right, especially on the S&P just now, and if I switched all of this off, it's a no man's island anymore. Everybody will start to say different things. It just becomes so subjective. Okay? Everybody will just start saying, oh yeah, this is a sideways market, you know, this is a daily over here. On the 4 hour, yeah, it's an uptrend because you know it's going up. I've seen it all, right? And then I know you guys will be laughing at it, and a lot of clients start to laugh as well once I start putting it in this way. And this is a sad thing that's going online. There's so much of this, right? And then they will look at this and then they'll say downtrend, and then the 15 minute because they don't know anything, all right? And then over here, and then you see, look at what will happen, right? If you did that, and then you see the downtrend, and then they just randomly just come in now, and then they're thinking, they're panicking now. Oh no, is it going to go up now for more further? You see how you can really shake your conviction? Yeah, when you don't know all of this. So that's why first thing is understand market structure. Okay, very simple, but you just got to understand the building blocks of this, right? And that's what we are doing over here. Okay, so good. So now that you understand that, now after the cycles only, as I mentioned, I'll reiterate, you get the trends and phases, which all have been coded. And the good thing is, it's all been coded by our clients. The community itself uplifts the community here at Master the Markets. Okay, really, really very good, strong community, very high quality. Okay, now some of you might say, okay, but what's the first step, Tiru? You know, I understand now market structure. Thanks for explaining all of that. Now, how do I go about doing this? How do I go about defining it, right? A lot of you on the Zoom are being very appreciative over here as well, and all the comments we're getting. Now, but what's the first step? The first step, you see, some of you would have guessed it, right, is to quantify. You got to know what a top is and what a bottom is. In other words, you are defining what the beginning and the end of a swing is. So you know what? Let me explain this first, the beginning and the end of a swing. It is so, so important. I was talking to another Canadian client the other day, and he said, you know what? You know, regardless what time frame we all trade, you know, we are all somewhat trading part of a swing. So we are all kind of swing traders. Okay? We're all swing traders. Right? Which is true. He's right. Yeah? And that's what happens in market structure. You know exactly, when you look at it, which part of the swing am I in on the other time frames. That is the power of it. You get crystal clear, and that you can then trade with conviction. So here, what I can then take a look okay, over here is that the beginning and the end of a swing. Okay, if I know that that swing is beginning here, right? And that's why we got the dots and the arrows. The dot and the arrow comes at the same time. This is what we call the confirmation bar. The confirmation bar fulfills the formulas, what we have programmed. You can design your own ones as well. And then once it fulfills the formulas, then this arrow comes up as well. So it comes at the same time, the arrow and the dot. Okay. So that's when we know the swing came in. You see, if I want to show you a simple example here, let's take this swing here, right? Bottom to top. Okay, move. If I were to say, how many of you would like to enter? Let me just write 1, 2, and 3. Where would you all like to enter in part of this swing? Okay. Whenever I ask this question, yes, a lot of you are saying 1, and that's what everybody says, right? Everybody want to enter here, right? Because then there's why. Why would you like to enter that? Because then there's more move left in the swing, isn't it? It's critical, right? Now, since we all say it's number 1, but here's a subtle critical point. You can only say 1 if you know where the bottom is, isn't it? Right now, we're looking at hindsight. Yeah, so everybody says 1. But in real time, we want to see where 1 is coming up, and that's here, you see? And there, over here, traders, if you go into here, and that's what it's telling me, and that's how I took that trade, you see? Now it's making sense. A lot of you I can see are saying, okay. You see? That's where the top to bottom began, with that confirmation bar. You see, start of that swing, you see? Right? So that's what it's exactly doing. And over here, because we're only including only the last 2 dots, but you can see in replay mode when that dot actually came. So if I were to do start new, if I were to show you that, you will see it, where that arrow actually came, because the arrow and the dot comes at the same time, right? You see? So I think I need to put that up. Just loading up. Just give me a minute. Yes. So if I were to do that again, so let it load up. Take some time, but I think it's worth for you guys to understand this. And then finally, of course, where you enter and all that is to do your strategy rules, okay? But this is just on the first part of market structure. So if you see over here now, you see the arrow came on this bar, isn't it, right? So that's where, if you could see the dots, that's where the dot would have come, okay? That's your confirmation bar that confirms this arrow, okay? That's what it's all about. The reason why we removed most of the dots, only just kept the last 2, is because so it doesn't confuse people, okay? Because we had people saying, oh, this confuses me if I got too many dots, right? So that's what we did. Right, good. So we got that. So we leave that one. And then you can see the last 2 dots are always shown, okay? Right. So now that you understand market structure, now you can understand, right? So now we can know when the beginning and the end of a swing is, right? That's the whole point of market structure. That's why we quantify what a top and a bottom is. So it goes hand in hand. So that traders, so even when sometimes the market does this, okay, after I got that swing confirmed, it does that, comes against you, you don't panic, because you know that this is part of a bottom to top swing, right? And of course, I'm not expecting something to keep going up, just straight up, right? Not like that, no. It will have some volatility. So I'll still stick in, because now I know the beginning and the end of a swing, because I've quantified my tops and bottoms, which is the very critical step for defining market structure. Okay, so once you define your swings, then you know what your cycles is. You can compare the highs in a systematic way, and then after that you can get your trends and phases across all the time frames, which is what we got over here. You see, this is a very clear example that's happening here. You see, it's a top to bottom move. Even when this goes against me, I don't panic, because I know this is a top to bottom move swing. You see how it's coming very clear, right? And I can stick on if I'm sticking on with my short bias towards my larger targets. But we already took some profit on our first target already, on our first position, right, which we have placed. Those of you who want to come in a bit later, you can then, okay, now time yourself and also go for the low, okay, and the stop for the high if it does come back on it downside, okay. That's another way to enter as well. We call this stops to cash, which I explained in the futures workshop. Okay, good. So now we understand this. Okay, this is the main important part. After this, then I can zoom through the rest. I know I'm going through a little bit more time, off time a bit. Now, the three stats, I've explained this in our other videos as well. After you understand this market structure, right? So price action first, then you on building on the bars, then you get your swings, your bottom to top, top to bottom, then you get your cycles, then you compare, you get your trends and phases. After you got the market structure, okay, then you see over here also, if I were to explain this to you very clearly, this is very easy now to explain. Because once I got market structure here, with the first step, quantifying the tops and bottoms, I can convert this into a line diagram, you see? Very easy, right? I mean, top to bottom here, right? Very easy now, right? And then it's taken out the last low, so therefore it's a downtrend. So you see, very easy, comes very clear. Because now I can convert this into a line diagram. Now, after that, I can pull out three stats, which will increase my conviction and move me towards consistent performance, which is over here, right? Over here, what I'm saying is, you see, I'm measuring the distance of each swing from point of entry to maximum point reached, all right? And we programmed all of this, right? And onto here, you see, we got the OE chart. And then from here, if I just tick on the stats chart, it's, you see, what it's doing is measuring its swing. You see, it's telling me this on the S&P, the 1.18, 1.93 here. This did, you see, this is a long, it's a big one, 4.06. So then it pulls all of this data into this table over the last 15 years, right? 2010 all the way to now, right? And then what is telling you that, you know, out of all the 417 swings on the daily time frame, and I can do this on any time frame, by the way, right? I can pull this onto any time frame. As you see, it's happening on the 4 hour here. I can pull the stats chart on everything. I can do it on a 15-minute, right? You can see on this 15-minute over here as well. This was a very big, enormous swing, 13.47, right? ATR. So you see, I can do it on any time frame. I can pull the stats chart on any time frame. So once we understand that, from here, this clearly defines to me, and this is pulling over what? I mean, as long as the broker can give you over 16 years of data, right, on the daily time frame here. And then from here, I can pull out. Do I want a very small target? I can choose the 87, 80, 80%, 90% probability. And trading is based on probabilities. Right, that's how it should be. Everybody says that, but they don't show you any probability numbers. We are the only company that does it. Right? All our clients have checked it and they've said, you know what, you're the only guys. See 0.25 ATR. So whenever the confirmation bar happens, I can put a target for 0.25 ATR in the swing direction. And that's a 87%, about nearly 90% probability of hitting it. But if I think that, you know what, it can move a bit more, right? 1 ATR is about 60%. Then you can do that. But that will come down to selection. Will this guy run? And that's where you align different time frames and all that based on your strategy rules, right? Your VSA methodologies. So it comes down to selecting now, right? And then if you really want the longer runners, then you choose the 20% 3 ATR target, right? So these are all the things that this can guide you. Then there's another thing that you can also do, the MAE number, right? This will help you towards your stop loss, right? So let it pull that out. So these are the three stats that you can do: OE, MAE, and time to. MAE will help you place with a stop loss, right? Initial stop loss. And the time to as well. How long does it take to get to the target? In fact, all of this, I know I'm rushing through this a little bit, but we'll go through this in the masterclass webinar very, very slowly, systematically. So very, very high, good quality over them, right? So definitely remember to register for that. Now, once I come back to here, you can see this is the MAE numbers, right? So this will tell you where to place your stop. So if I place it at 1.5, I won't get stopped out 95% of the time. Now that's how you trade with conviction. Now you understand, right? All because now you understand market structure. This is how important market structure is for swing trading. Okay. And then finally with time two, I don't have much time to go on this. Interesting enough, isn't it? Time two, and I say I don't have much time. So time two, what it will go to is, it will look at how long does it take to get to a target. Okay, so that's what it will start to do. All right, that's what we are looking at here. Right, that's your time to stats. And you can, the good thing is, you can put the stats into any strategy or methodology. Okay, doesn't matter. Right? Okay, good. Now, finally, after these three stats, then some of you might ask, isn't it? But then maybe I can create my own market structure too. I can just quantify my own top and bottom by myself, right? Yes, you can, of course. But then whose one is the best? The best one, as I said, I'll give you the bonus answer to this question, is that the bonus question, the answer, not the biggest cake which you're seeing here on the picture, but the one that produces the largest OE. That's the best market structure. You see, no wishy-washy here. Basically, all I'm saying is, if you create one market structure, okay, right, and let's call it market structure 1, and then this one is market structure 2, let's say, right? If market structure 2 progressively produces the largest average swing distance, you see, that's the thing. Okay, the average swing distance. If market structure 2 creates the largest average swing distance, or on your probability distribution table, then that's the best market structure. Okay, right, so that's how we do it. See, very systematic, very logical if you really think about it. But those of you who need to go through this, yes, go through the video a few more times, but I highly recommend the masterclass webinar where we go through this very systematically and slowly. Okay, so just to give you a rough idea, the summary about what we've covered so far. So first, we understood the 3 building blocks of market structure. Okay, and then the second thing is that we looked at from the 3 building blocks, then how you get your trends and phases, right? After that, then we said, what is the first step that you got to do for building the 3 building blocks? You got to quantify your tops and bottoms. Okay. Then the third thing that we looked at is the 3 stats that you can use in any strategy along with the trends and phases. Right. Then the bonus question is, which is the best market structure? The one that creates the largest swing distance. Okay. So that's in summary what we have covered so far today. But remember, the most critical thing I must say is that none of this is possible without this step, the first step. You need to quantify your tops and bottoms, because if you do not do that, right, you wouldn't have been able to take that trade with conviction. You see, if I don't know where the top and bottom got confirmed, then I wouldn't get conviction where the beginning and the end of the swing is, right? That's the critical part. Okay, I can do this across any time frame. See on gold over here, you see top to bottom, nice move written over there, right? That you can write. Some of our clients actually took that as well. Once you understand that and put this in with a good strategy, okay? And then over here on Brent, let's see, let's come down. That's why you see, that's why we're not rushing into that trade, okay? Now, if it does turn back again, right? Now most of you understand by now, if that confirms as a top to bottom move and I come back again, back in my phase 1, that's when I can start to take a trade, right? Even if that happens tomorrow, be patient for it, okay? Now you can see it with clarity. That's the whole critical part with market structure. It gives you absolute clarity. But just a few last things I will say, but even then, this is not your holy grail, right? Because with market structure, then it's got to fit into your strategy construction, how you then make your strategy together to select which swing you're going to trade with all the 3 stats. Okay, so it's a very vast topic and it's got to be taken it systematically. That's why clients will join us. They just stick with us for over 10-15 years. Okay, right. With that all said, the last few reiterations, what I will say, masterclass webinar, highly recommended. We put a lot of time and effort to collate all of this together, 15-20 years of research. So definitely look through all of this, and then you can select the date and time over here. Okay, all happening at 7 p.m. UK time, and in Eastern time will be highly probably 4 hours or 5 hours behind. Okay, so it's conducive for our US Canadian clients also, and from anywhere in the world. The other thing is our YouTube channel, right? YouTube.com/Master the Markets. You can look through it, and then I've given you some reference links from before. Subscribe and hit the all bell icon. The final thing, yes, some of you might be already convinced today. that, you know what, you want the indicator onto your screens, highly recommend it. Remember that also, you just don't get the indicator, you get all these things as well, okay? You get the arrows, the dots, you get the alerts. On TradingView, you can program that. And most importantly, you get every month, you get a group session also. You can join in on the Zoom. You can join with everybody else. You get on Elite Traders portal, you get the 3 strategies as well that you can do along with this. So it's quite a lot. And you get a one-to-one live trading session as well with Trader Coach. Highly, highly invaluable. So you get a lot of things, just not the indicator. But remember, the indicator is just not an indicator like a buy and sell indicator. Now you understood it. It's market structure, and market structure gives you so much clarity, right? The smart money indicator reveals to you the smart money framework, okay, which is part of market structure, right? That's the whole premise of this. So you can go ahead and get it. You can take advantage of the discount codes as well that we have. And other than that, the last quick shout out to Trade Nation, who are sponsoring us for our ETM annual summit, and as well as our live streams as well. So if you want to find out more information on how to open up a broker account with them, you can find that all information on our Telegram channel as well, also on our YouTube channel as well, or you can email us if you can't find it there, okay? Great. I think with that said, I'll just leave it on this page. Definitely register for the masterclass webinar. I know I've taken quite a bit of time already for today, traders, and I think we got a good, nice trade as well on the S&P as well. You saw how we did that in real time too as well. Now, I think the main questions that are coming through, I think I've covered most of them, which is, where do I get the indicator? Where do I find out more about, this whole systematic approach, logical approach? As I said, I mean, first go through the masterclass webinar, right? So that's the first place to go through. After you put in all your details, select the date for it as well. All happening at 7 p.m. Keep it easier. UK time, that is. Maybe we should mention UK time. But other than that, I think that's the thing. So you can select what you want, and then highly recommend it. 15, 20 years of collated research that goes in all together. I think with that said, traders, as we always say, we hope you found this really, really good. If you really found this very good, hit the like button, okay, over there as well. Okay, smash the like button and subscribe and hit the all bell icon. Other than that, that's pretty much it for today from us. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.